Before I start, I want to address obviously what's going on, not just here in Los Angeles, but across our nation and really across the world. The video that came out about George Floyd represents something that I believe no one should have to experience. Black Lives Matter. I stand with you and the movement. It's truly tragic. My heart is completely broken. But obviously, this is a problem that's not just contained to George Floyd. Unfortunately, this is rampant, and we're seeing a lot of issues that hopefully, as a nation, as a global society, we can take this moment to create a moment of positive change and hopefully reform a system that's clearly creating some horrific injustices across our world. And now is just not a time for silence, no matter what platform you have, whether it's about social issues, politics, cryptocurrency. I believe everyone needs to join in on this conversation. We have an amazing episode for you today. We have Mike from Bloomberg on to discuss some really exciting predictions he has, and he's going to lay out his analysis as to how he believes the cryptocurrency markets, the precious metal markets, as well as the general equities markets are set to behave throughout this period of civil unrest mixed with COVID-19. It's a crazy time in the markets, and I'm really excited to present to you this episode with Mike from Bloomberg. So if you're excited, do me a favor and throw a like on this video, and let's begin. Well, there's so much has happened. It's been months since we've had you on. We've had the coronavirus impact on the economy. We've had the stock market rally. We've had a lot of things that people have trouble contextualizing. Why are the stocks pumping when 40 million Americans are out of work? How is it possible that all of our businesses are closed, yet these equities are growing? And then you get this sort of civil unrest that we're experiencing. And there's, arguments obviously around that Bitcoin is an opt-out of the traditional economy. Is that going to add fuel to the fire? Do we see evidence of that? I think there's a lot to sort of unpack, but let's start, I guess, with the bigger trend, which is coronavirus and the sort of V-shaped recovery that the stock market, the equity market had. What do you feel towards that? Because I know that that's been almost enraging for a lot of people to see that growth, to see the amount of money printing happening, quantitative easing, and how do you contextualize the behavior of the stock market, and how do you contextualize the health of that sort of mainstream market versus what you see as far as the overall economy?
Well, I think the stock market is a bit overdone. I'm afraid to use the word delusional, but in some ways I believe it is. And I like to ask myself and our viewers and anybody who really understands finance, who did not expect a massive amount of liquidity in this environment? That's all we're getting, and that's what people are using for the excuse for it to be going up. And to me, this is completely scripted. I didn't think the stock market would have bounced this much, but I think at some point it's going to roll over, and it has been underperforming gold for quite a while. Obviously, we know it's been underperforming Bitcoin. Bitcoin's been outperforming everything, but I view it as just a bit part of a longer term period where the stock market should underperform. And this is a bit of the phase where it's maybe somewhat, it hasn't figured it out yet. And most people haven't. I think it's just a matter of time. Now, but translating it over the Bitcoin, one thing that I really find impressive is if you look at measures of risk, i.e. volatility, I like to use 260-day volatility. 260-day volatility on Bitcoin is the lowest ever versus the stock market, versus the NASDAQ, versus the S&P 500, which to me tilts favor towards the Bitcoin. And that's why I'm still having my favorable upside. So beginning this year and at the end of last year, I still stick with that outlook that I think gold and Bitcoin should be some of the best performing assets this year. And so far they have been. And I don't know what it's going to take to really change that. Just kind of worried about the stock market. I think it's a bit odd.
So when you say that it's just because of excess liquidity, obviously excess liquidity is only existing for a very select few groups, right? They're talking about the people very close to the money printing, the bankers, some very elite companies and individuals even. Is this kind of pulling the veil back on the myth that the stock market reflects in any way the real economy for average Americans? Because it seems to be that there is such a gross mismatch between most people not having any money, not having any job, not having any opportunity, and an excess of liquidity happening from the money printing, from the stimulus. It seems almost as if the sort of the charade is up, that the equities market is really representative of anything to do with the American worker. Would you agree with that, or is that too far?
Well, I think it's sometimes people use that narrative a lot, and they miss one key thing, and that is Milton Friedman used to say, "Don't confuse the stock market with the economy." Now, I don't always agree with that, but right now we're one of those rare periods where it's a major disconnect. And by money printing means liquidity providing. The Federal Reserve and every central bank, virtually every central bank on the planet, is providing a lot of liquidity because it's the right thing to do, because deflation remains the primary force. That's what they're supposed to do. Let's look at the price of crude oil. It's went negative recently. A lot of this is because of technology. Now, if we have inflationary pressures, they'll do the opposite. And they did. Volcker Fed did it in 1980. So what I think is wrong is this unemployment situation is going to be enduring. It's going to last a while. I think eventually the stock market is going to get it and realize earnings aren't going to come, and it's going to go down. And here's a simplistic way to look at it. The S&P 500 is about 3,000. Volatility in the VIX is about 30. That implies on a one-year basis, it should be up or down 30% on a one-year basis. So I'm looking at S&P 500 more likely to go to 2,000 than the 4,000 in the next, who knows what month period. Now, to me, that's rational, that's logical. And I think that's my outlook. If it goes to 4,000, that's better for everybody because it lifts the tide. If it goes to 2,000, that's actually bad for everybody in a way because people are going to lose more jobs. So it's unfortunate, but that's just the way the economy works. It all trickles up. It's a big tide, and the tide right now in the stock market is lifting things up, but I'm more fearful it won't continue. That's why I still stick with, to me, the better performing asset should continue to be in the future gold and Bitcoin.
I couldn't agree more, and I guess what I see is I agree. Obviously, the strong stock market does bolster things. It floats things. It keeps things like pensions high. It keeps things like common interests that we have that we all are invested in. Most people who are career workers in America have some exposure to the stock market. However, there is an element of these things are getting floated and this liquidity is getting there, but it's not really getting there in an even, in any way distributed manner. And so you're getting kind of these showpiece assets are maintaining or growing in value. But where the hope is that we can somehow get that value to trickle around to the rest of the world here, the rest of our country at least. Because I think that, we've seen throughout history that a strong working class, a strong middle class is really good for the whole country. So interesting, and I appreciate your perspective as always. Let's turn to the things that you are more focused on, which is, of course, the commodities markets, the precious metals, and, of course, Bitcoin. I saw an amazing analysis come out that predicted that Bitcoin would retest its highs as early as this year. And if I'm not mistaken, that was actually a Bloomberg report. Was that your report?
I think that came out from me. Oh, okay. Here, I think it was, sometimes that happens to misquote. Last year's high was around 14,000. To me, that means nothing. Retesting last year's high means nothing. And that was me predicting it. Now, retesting 20,000, I don't know if that's going to happen this year. But getting back to 14,000, I think is just normal rotation within a bull market consolidation pattern. And the way I described it is the advantage that Bitcoin had the beginning years, it ended the year last year near the lower end of the range, maybe around 7,000. Getting back to 14,000 really means nothing in the big picture. I think it's likely to happen, yet it's a double in the price. So maybe who knows when or how it does it, but that to me is how I view Bitcoin is so attractive this year. Now, if it ended the year around 14,000, I don't know how that I'd be less bullish, but it's what crude oil did in 2019. It just ended at the lower end of the range and popped to the upper end of the range. Now, it's one of those ways, pattern recognition to look at markets sometimes, but now we have new information, very bullish. We have every central bank in the world easing. We have gold taking off, and that should increase the bid below Bitcoin, and it is, and it should continue to appreciate. And that's the way, to me, the simple narrative is, for Bitcoin to not appreciate, something really has to go wrong that I can't predict. Something wrong with the chain, some kind of hack, or some kind of government regulation. Otherwise, we see adoption and demand going like this, and we all know what happened with the halving, supply is going like this. It's that simple.
Yeah, I think that's really just the core belief is, more people, less supply, and even if the supply remains constant, or even if the demand remains constant and the supply continues to shrink, you should see appreciation. But I guess what I really want to understand too is, I think Bitcoin, to at least the members of the crypto community, possesses a lot of attributes that are almost like, hey, if we could redo gold, we would do it this way. Do you see Bitcoin being more advantageous than gold in a lot of ways, in the way that the Bitcoin community would describe that?
Number one factor is Bitcoin supply is more constrained than gold supply. Here's an example. So this year, next year, Bitcoin supply should drop. The new supply should drop to 2% annually. Historically, since the beginning of time, that's been the average gold supply. Now, sometimes it can peak, sometimes it can go down. But I guarantee you, if gold prices go up, there's going to be a lot more supply coming on, i.e., all the mines that are not profitable come back on. That can't happen with Bitcoin. That's why, as a strategist, as an analyst, I look at it as, wow, the only thing that matters in this space is adoption, and all my indicators are positive.
Yeah, and I think that we always hear about the adoption is coming, the adoption is coming, and you'd want to believe, at least as someone who's been committed to this movement for several years, that the essentially debasing of the U.S. dollar, which is the best fiat currency in the world, not by a little bit but by a lot of it, would be a big driver of that. When do you think that money printing is going to come home to roost and potentially trigger any kind of inflationary environment and or what we'd like to see especially, which is an increase in the fiat value of Bitcoin?
It's going to be a while. So this is a narrative I've been on top of for at least a decade, and people expecting inflation. I at least to say good luck with that one, because the deflationary forces still remain the problem. And that is most emphasized with the fact that we've had this massive global U.S. economic expansion, and yet most inflation indicators went down. Let's look at the most significant commodity on the planet, crude oil. It trades $35 a barrel. The inflation-adjusted price is $50 compared to where it started in 1980. It's still, there's inflation's, the problem is deflation. Still, that's why central banks are doing what they're doing. And believe me, they only want to make the economy better for everybody. And it's just a matter of time. At some point, we will get inflation, but I think it's going to take the opposite of what the Volcker Fed did in 1980. And to tell you what they did is the Fed increased rates well above inflation, well above bond yields to squash inflation. It did. And since then, trends have been heading lower. I can show you some charts on that. And trends have been so significantly trending downward towards deflation. I think it's going to take probably negative rates and probably a long period of printing money before we actually get inflation. And that's the ultimate goal. And I don't see it happening organically at the moment, and certainly for a while, because this is not just U.S., this is global.
So for those saying, hey, they're printing money, why isn't Bitcoin going up? That doesn't really address why Bitcoin would go up in value as a hard asset versus something that's being debased, because of what you're explaining, that we've actually been in a deflationary environment within the context of the US dollar because of decisions made by the Federal Reserve. That is a force that will slow down the actual strict inflationary sort of view of, oh, if they're printing more dollars but they're not printing more Bitcoin, then Bitcoin should constantly go up in value versus the dollar. That can't happen until we actually experience inflation, right?
Well, let's remember what inflation is and always is. It's basically debasement of the currency. Mm-hmm. More pieces of paper chasing a fixed amount of goods. And that's where gold comes into play. Gold doesn't go up and down versus the amount of gold it takes to buy a house or man's suit or land in Iowa. It stays stable over time. It's that piece of currency that it fluctuates in value. So, give you an example. Gold has made new highs in the euro, Japanese yen, British pound, Canadian loonie, you name it, Indian rupee, and it hasn't done in the dollar yet. It's just a matter of time because the dollar has been strong versus other currencies. But all those other currencies are going down versus the value of gold. Gold just stays stable versus overall assets. Now, Bitcoin is so new in the space, and that to me is what's happening this year. It's becoming more like gold. Used to be more speculative. Obviously, it's still speculative, but it's becoming more of a digital version of gold, and it should trade more like gold. And actually, can show you that in It's beta, its volatility versus gold is near all-time highs. It's also becoming that store value I think people get versus something you just want to knock around and speculate in. Yeah, sure, you want the value to go up, but and it should continue to do that. But that's one thing to always remember about inflation is almost always debasement of the currency, printing more. I mean, there's examples in history: Venezuela, Zimbabwe, you name it.
There are
printing
many.
money.
There are many.
In Germany, the Weimar Republic. I mean, Germany after World War I. Things like that. Examples in history.
So there's also this narrative around gold being artificially suppressed in price. Not everybody fully understands how that happens. I sort of understand that it's because of the paper gold that's created by ancillary markets. What is your take on the concept of gold being sort of artificially suppressed in price? Because there is a real fear that similar tactics will be used on an asset like Bitcoin, as you're seeing with sort of paper futures and stuff like that, where people aren't actually having to touch the underlying asset, getting exposure. What are the actual effects on spot prices in your mind? And is gold actually trading at its real value? And then I have another question about gold after you answer that, which has more to do with accessibility, which is, from what I hear, it's very hard to buy physical gold right now, especially right now. The sort of ultra elite rich have sort of scarfed it all up, and there's not really a lot of gold supply on the market.
Yeah, I don't really buy into that narrative that gold is artificially suppressed. So it's almost always entities that have a vested interest in going higher, gold bugs, as we might call them. So now, to me, it's very much fair value. And of course, I mean, they take a global a concerted effort, and there's a lot of central banks in the world are buying gold, and most of them have been. I mean, last year central banks absorbed 20% of the supply of gold. It looks like they're kind of pushing up the price of gold. If you ask me, maybe the U.S. government has the biggest hoard in the world, but no, I don't buy into that at all. So that to me is just vested interest. People, gold bugs can be kind of a strange group. And the other question was more about Bitcoin. What was that one? Refresh me.
Right. So Bitcoin could be experiencing, it's a much smaller market, more easy, way smaller amounts of liquidity can influence the market. And so there is the fear that people can artificially inflate the supply of Bitcoin with ancillary markets that aren't actually physically delivered, that are, for example, like CME futures. People argue that could potentially risk sort of a de facto inflation of the supply of Bitcoin, people essentially benefiting from the Bitcoin asset without actually having to acquire it. Is there a risk that these things can slow down the asset growth, or in your mind, are those fears overplayed?
Way overplayed, virtually, usually from people who have a vested interest in going a certain way. It's very entertaining. I mean, I've been dealing with these kind of things since being in the trading pits in the 80s. Baron, like futures, to me, were one of the best on-ramps for Bitcoin into the mainstream. It's actually the first on-ramp. CFTC futures are U.S. regulated. It's going to be the on-ramp to a ETF. And unless you're one of those pure, people who don't believe in government getting involved, sorry, but that's the way life is. And I mean, it is. And so it's been one key things to help suppress volatility, because it allows institutions and professional traders to use margin and get long or short. And to me, the trend in open interest and volume clearly from the lower left to the upper right is a sign that an ETF is a matter of time. So I view futures, and also give very good price transparency. And I don't trade on weekends yet. We'll get there. But from a futures background standpoint, it's just a matter of time that Bitcoin gets in mainstream. So here's the iterations I see. Futures are part of the on-ramp to an ETF. It should be a matter of time. There's ETFs in other parts of the world, or ETPs, trusts. And by the time Bitcoin starts trading an ETF in this country, which Mike Novogratz said might take a new chairman at the SEC, that's not my quote, it will happen, just a matter of time, because it came the futures. The price will probably be much higher. And that's just likely, because people, I think, get it that, hey, this is new gold. In, 5, 10, 20, 100 years from now, it's probably something I should be allocating to. And if it goes away, well, make sure I don't allocate too much to it. But if I don't buy it, do I think digitalization and technology is going to go backwards? No. So it probably should. And it's winning. It's won the adoption race.
In your mind, does the idea of a digital gold being an asset that's easily transferable, easily, fungible. They're working on ways that, with second layer solutions, that this can actually process as many payments as credit card processors and stuff like that. Even without the actual fungibility, the actual treating it more like a currency. Do you see a path for Bitcoin to start occupying similar market cap to gold, given that in your
Yeah,
mind it is a digital gold? This
it's
is
heading that way. I don't know how fast it's going to get there, but it's going that way. But I look at Bitcoin as, yeah, I guess you can use it for it's ideal. It's okay for transactions, but gold isn't. I look at Bitcoin as, why would I use something unless I really have to for a transaction that is designed to go up in price because of limited supply? So I would rather, I mean, in our environment, since we use dollars, might as well use dollars. There's plenty of them. You don't get any interest rate. But I use Bitcoin. Bitcoin is more of a collectible. It's the kind of asset I want to take my dollars and put aside and use as an investment. So to me, that's where, I mean, Satoshi Nakamoto, I think, created what was supposed to be called peer-to-peer cash. Is really more digital gold, and I think it was what he created. Now, Tether, if you just watch the AUMs and what's happening now, that and what might be happening with Libra is more, I think, something that'll be used on a day-to-day basis for transaction. Here's a question I want to ask our audience is, when we pay 2 to 3% on a credit card for a transaction, and of course there's other vehicles that use fewer, lower percentage amounts, that just does not make sense in in an environment of 0% interest rates. So at some point, we should be able to use central bank and digital currency for that. Now, is the central bank going to do it? To me, it's just a matter of time that this piece of paper that no one wants to touch anymore is going to be digitalized, and we'll be able to all use it and won't have to have that intermediary of a credit card anymore. Is it going to be? So I think that's the way Bitcoin fits in as the gold aspect and more independent. That's why it's so attractive. It's completely independent. It's no one else's project. Every other cryptocurrency, every project, Libra, everything is someone else's project. Bitcoin's independent, like gold.
Yeah, I think you hit the nail on the head there, and whether it takes 5 years, 10 years, I think it'll probably be slightly less than that. But if you knew something was more than likely, with pending any kind of black swan event where there's actually something that jeopardizes the network, if you knew that something's trend was almost sure to grow towards the 100,000, towards the 200,000 or 300,000 level, and it's currently trading at 9,700. Just like you said, why would you ever want to do anything but keep collecting it? Except, I would put out the example of, hey, right now, if you're going to buy a house, you'd expect tons of fees, tons of processing time, tons of issues with there would be tons of delays and tons of friction in that process, where using Bitcoin you could see as, hey, who cares if I have to wait 3 hours and pay a $50 fee, or even $5.10 really, which is much more realistic. But even if it was $50, that's a nothing for a big purchase like a house. If you were going to get a life insurance policy and you had to wait for 30 minutes for your Ethereum transaction to go through, these are the types of things where I think the application for these important applications, it doesn't matter about having the transaction times be instant. But there is a bigger vision here, like you said, of if there is and going back to Tether, I believe Tether has in many ways won the war of the stable coins. And like you said, the data doesn't lie. Tether serves a purpose. People in crypto hate Tether. I understand the hatred towards Tether, but also just understand that they put out a product that works, right? And you don't have to like it. You don't have to like them, but people rely on the product and use it in a daily pretty much they rely on it daily. And I know people who use Tether like cash. And so they're very well with Libra and central bank digital currencies, there's going to be a ton of competition in that space. But there is definitely a huge vision there of, if Bitcoin does start to take on the transactional volume that's required for one of those coins, then all of a sudden you get something tremendously interesting, right? Where you get a digital gold that takes on characteristics of cash. And I think that's definitely what I hope will happen in the future. But in the meantime, I think you're right. I think Tether's the winner. And then next up, you could see something like a Libra, if they're able to get out of the gate, if they're actually able to launch, and they're not going to get completely destroyed by regulators. We'll see how that works. But it seems like they're pretty steadfast in pushing forward towards launching. I think you're right. Tether is essentially what we have is peer-to-peer electronic cash.
I was in Hong Kong 2 years ago. It was right after the typhoon. And about a year before all the riots started, and I remember most people really hated Tether, and I'm like, I'm objective. I'm pointing out this. Here's what the assets are doing. Make that stop. And that was when it was maybe around 2 to 3 billion. Now it's 10, almost. It's 9 and 10. I'm like, trend's your friend. I don't know what's going to make the stop, but I'm going to stick with the winner. It's number 3 now, essentially right behind Ethereum. And that's why I keep pointing it out is Ethereum is great, but it's got tons of competition. And I get it, but you're going to use it for a transaction, maybe. Tether is pretty stable. It's getting there. And I just look, here's the trend. That's what did a recent bid on. And I pointed out, if you just follow the trends, at some point, it should be Bitcoin number 1 and Tether number 2. What's going to take to stop that trend? Tether is just increasing the assets under management, and so is Bitcoin.
Yeah. And, stable coins in general, right? That is, we understand why the government sort of came out, central banks, and said, hey, actually, the big problem here isn't Bitcoin, it's stable coins, because that's the real threat. That's the real threat to what's going on with central bank currencies. They don't really care if you have another gold. There's plenty of assets like gold that trade up, down, whatever. It doesn't replace the central driver of the economy, which is a medium of exchange like cash. And that's what they use in times of economic downturn. That's what they use in war times. That's what they use for everything. So if you can't print money, then it really handicaps the government in a big way. And I see there being a very likely battle over the legality of stable coins because of that. Do you think, I mean, obviously you're not a regulator, we're not expecting you to give any official opinion, but do you see that as a likelihood that if something like a Tether starts to become so popular that it might risk becoming illegal? It flew too close to the sun, as it were.
There you go. Yeah, all that's possible. I don't. That's why I don't really know. But for me, it was very simple. Was the inflection point for me in Tether was April 2019. Yeah, when the New York Attorney General came down on Tether, and the market just said, "I don't care," and just started continuing. That was like boom. That was I'm like, when the market doesn't care, I'm an objective strategist. Then I don't care. Bitcoin's going up, and trend's your friend.
Yeah. So where do you think Bitcoin goes the rest of the year? Obviously, there's a lot of volatility in the air, but assuming that these protests continue, assuming that COVID does not just disappear, there's a lot of people are waiting to see, we've had masses of tens of thousands of people gathering together, even though they're wearing masks. There's a very high likelihood that this could spur some kind of new wave. If the situation doesn't drastically change in the economy, does that bode well for Bitcoin? Does that show strength? Do you expect to potentially see even more upside, or is it not that simple?
Yeah, I think Bitcoin's going to be heading to probably 14,000 this year, at least test there. I don't know how long it lasts. I don't think it trades much below 8. That's my outlook. It needs something really to change to go down and stay down. And look at it as here's the narrative. First of all, Bitcoin had a very good test this year in March. When it flushed with everything else, it passed the test, and it passed it really well. So that's your stop. When you're a trader, stops below that. You don't want to get much below that 5,000 level, which is where it closed. You don't want to stay below that. That would be failure. I don't think it gets near there. And if it should continue to appreciate. Remember, I mentioned 14,000 early on. That's just the high last year. Every indication I have is to continue to appreciate. And I don't know what it's going to take to not. I look at it simplistically as what's going to take for Bitcoin to stop doing what it's been doing since its inception, and that is appreciating. In 2017, that was the key thing that got me bearish. It just went up too far, went up too high. That's why I got bearish. Like, this is a bubble, sell it. Classic trader reaction. Boom, it corrected 80%. Here we are. We're the 3rd year now in this correction. And here's one simple example. Last time we did this was, it was the 4th year that, Bitcoin finally broke out above the 2013 high. So 3rd year of unchanged in 2017. That's plenty of consolidation time, plenty of time to become more adopted. And it has been. And gold's been going up. So to me, if it doesn't continue to appreciate, I'd be disappointed. I'd be concerned because it's supposed to do that. It's just as a simple market strategist analysis. And so again, 8,000 pretty good support, 14,000 pretty good resistance. And guess what it means in big picture? Nothing. It's just trade within the range.
What do you think what do you think the short, mid, long term impact of the halving's going to be. I know that it sort of was the Bitcoin community, the crypto community, we love to sort of rally around big moments. And you know what the sort of tragic irony of it is that whenever something's extremely obvious, we found that it doesn't happen. And whenever someone, whenever you hear the wave of the crowd expecting things to go one way, it almost every time it goes the other way. And it's become almost of a meme in the crypto community that when everyone says one thing, it's a signal that it's going the other way. Just like whenever it makes it to CNBC, that's a surefire guarantee that it's going to go the other way, because something like 95% of CNBC's buy and sell signals in crypto have been wrong. Or don't quote me on that, but I've seen charts to that effect. What can we expect from a lower supply? How quickly can these mechanisms affect the market, do you think? Or is this just part of a long trudge that is many years long and cycles long upward?
So what you just said was what really impressed me about you a couple of years ago when I first scanned everything I could about who provided content in the space, is when you said profound things like that, is you liked crypto space, but you're a bearish Bitcoin. I'm like, that's the guy I'm going to listen to. And what you just said made a lot of sense. And I use that so much as a strategist. When I get every sense that I see the headlines that people are bullish copper, boom, I write a bearish comment, and only if I justify. That's something I explained to my wife today because it's a headline statement. So that's happened in Bitcoin a lot. When I listen to a lot of the podcasters and YouTubers and they get too excited, I know it's not a good sign. And that was really bearish. Just this recent, when we had that halving and it popped to 10 and went right down, I sensed went right down to 9,000. I sensed a lot of disappointment. I'm like, yes, that's what I want to hear for the continued trend. Boom, we're right back to near 10,000. So that's what you said makes sense. When everybody expects it, it doesn't happen. That's boom, it's priced in the market. So that's what I always try to do, is look ahead and look forward. And that's why I say is demand's picking up, adoption's picking up, supply's going down, prices must go up in that environment if history is a guide. Something's got to change. It's that simple.
And there's a logical explanation for the counter trend sort of reality, which is if you're a big whale in Bitcoin, and we all know that there are people who started with thousands, ended up with millions, people who started with hundreds of thousands, ended up with billions. There are examples of significantly influential wallets in the crypto industry. And it doesn't mean that you took $20 billion in. You could have started with a much smaller amount of money and ended up being a huge influential player, which is why these players, especially really savvy crypto traders, know, hey, if 90% of sentiment is saying it's going to pump, let's just, give them a little. Let's set off one of these indicators and then let's dump and they make a fortune off of it. And so that's kind of one of the unfortunate realities, is that it's still small as a market, which allows for this sort of whale play. And the hope is that we can continue to evolve as a market to the point where that's less of an issue. And, as much as crypto people don't like it, regulation, bigger institutional players, all these forces come and they end up normalizing and sort of taking the harsh edges off of those things. Isn't that right?
Yeah, well, that's so true. It's one thing I find about Bitcoin is, having been a trader, not anymore, most of my life, is it's ideal for trading. And those who really are good traders know they can manipulate it with the narrative. They can do it through social media and put in their bids or offers and get the market to move there a certain way with just certain little tweaks, certainly with the altcoins, and make money, which is illegal. And typically it's illegal. So good luck with that one. But they can do it because it's not that regulated yet. So to me, it's just... that's where
it's immoral, but it's technically not illegal, unfortunately.
In some cases, it's frontlining and anything that spoofing, stuff like that. It can be, depends on how dicey it is. Yeah. If you have collusion, if you have anybody else involved with getting the market to move, that's called collusion. That is illegal. But it's hard to enforce. But in Bitcoin, it's Wild West. We get that. I see it. But that's where I see futures as this is becoming adult. Just like everything else, it's a great technology and it's been used for nefarious purposes. Like anything goes, but then it becomes mainstream. It's there. It's heading there. Yeah. And Bitcoin's winning the race versus everything, every other crypto. And if this year, I think, is its defining year. And it should do well, meaning after this year, we're going to say 2020 define Bitcoin as gold versus before as a speculative digital asset.
So, what are your words of advice for people? Maybe there's people who are just getting into Bitcoin because of the wild set of world events that we've been going through, because of the economic downturns. Maybe people have been in the movement for a long time. From your perspective, what would you say to the sort of retail traders, here at coming into the end of Q2 2020? What are your words of advice?
Buy and hold, dollar cost average, don't trade.
Sounds
If
beautiful
it
to
gets
me.
stupid expensive, but if it gets stupid expensive, like at some point, gold did a few years ago. I remember I held a lot and I didn't sell everything I wanted to, but you realize, okay, thank you. We used to call it's a gift in the market. When the market gives you a lot of money, you say thank you. But I would suggest being careful trading. Leave that for the professionals. For anybody more like us, just dollar cost average and only look to get out of some if it gets stupid expensive. At some point, it should. Like I fully expect gold to get as expensive as crude oil got cheap, as the stock market got expensive in February, and maybe is potentially expensive now. To me, it's just a matter of time.
So
And that's what you're supposed to do with assets.
Bitcoin and
Like
gold
these are liquid.
could get as expensive as oil got cheap. I like
Yeah,
that. I like that. That's a profound statement because obviously nothing got cheaper than negative.
there you go.
But yeah, amazing times, extraordinary times as usual. Thank you so much for sharing your expertise with the audience, and we look forward to having you back on soon. Take care of yourself out there in Connecticut.
You too, Elio. It's good seeing you, and it's good to be back on. Good luck to you and all your viewers.
Thanks. Also, if you're not already signed up to crypto.com, you definitely want to check them out. They're a channel sponsor of mine for the long term, ongoing, and they're doing another 50% off Bitcoin special. They have $2 million worth of Bitcoin that, whatever the price is on the 30th of June, you'll be able to buy Bitcoin at 50% that value. They did this for the halving, and they're going to be doing it again. That's for their exchange, which I don't believe is available to US customers. But what is available to US customers is their credit card, which they're offering up to 20% back on food delivery and 10% back on grocery. That's cashback rewards on their credit card. I have a card. I love it. They're also saying calling all ADA holders, earn up to 6% PA on your ADA with interest paid in ADA. Deposits and withdrawals are also enabled. So here you can see they're adding a staking bonus for Cardano. So I know a lot of people are excited about Cardano's imminent launch of the Shelly mainnet, and this is a great way to celebrate, mixed in with the 50% off BTC and all the cashback rewards. If you don't have a crypto.com card, I encourage you guys, please sign up and use my link in the description of this video. It really helps me, it helps the channel, and we should really do our best as a community to support these advancements that allow crypto to function like money, which allows us to overcome significant obstacles to adoption. So do me a favor, if you're not signed up for crypto.com, click on that referral link and get signed up today. Well, I hope you guys enjoyed that. I know I certainly did. If you enjoyed this video with Mike from Bloomberg, do me a favor and hit that like button. Of course, if you're not already subscribed to FUD TV, you can hit that little sub button and you'll be made aware whenever I put out new videos. As usual, my name's Elio Trades. You're watching FUD TV, and I'll see you very, very soon on the next episode.